Hello everybody. So my name's David White, I'm from Carbon Black, and today I want to talk about a different perspective on cybersecurity. And sometimes, we can get lost in kind of like the daily rigmarole of protecting environments, looking at the tactics, behaviors within an environment, how to protect endpoints, the network, to keep data safe, and we kind of forget about the motivators of the guys that are behind the attacks themselves. Now, as I'm sure many of you are aware, when you start to depersonalize cybersecurity, you start to think about things differently in the way that the people behind the attacks are motivated to try and commit them in one way or another. So there's a great piece here in the Journal of Applied Business Research, which was titled A Human Capital Perspective on Criminal Careers. And this goes for careers criminals in general, not just criminals or cyber criminals. And it states the existing economics literature has traditionally viewed crime as a choice-making process where the potential criminal chooses amongst alternatives based upon costs and benefits of each. Now, if we think about that for a second, in everything that a criminal does, there has to be kind of like a motivator, a risk and reward type understanding of what it is that they're doing. And part of that paper also had a calculation. So on one side of the calculation, you had what do they get from committing that particular crime, and that's offset against what do I stand to lose if I get caught, and what are the chances of being caught and convicted. Now, on both sides of that is both the material benefit and the psychological benefit. Now, the psychological benefit of actually committing it is having kudos with other cyber criminals to state, yes, I've managed to do this, I must be very talented. But on the flip side of that, you've also got the opportunity cost and the psychological effect on the beneficiary around being caught. What's the psychological effect out in the field of these types of things being well known that cybercrime has caught up and is able to stop. So if we look at that in a business sense, that's pretty similar to how we think about things when we have new product launches. What are the benefits of launching into new markets, and against what's the opportunity cost, and also what is the probability of success? So when you think about it laterally, it's very easy to make comparisons between the business world and the motivators of cyber criminals. And we really need to stop thinking of hackers, of people in hoodies looking at green screens as the typical type of cyber criminal, but more of people like you or I that are just normal business people. But actually, some of these networks are highly sophisticated networks with different roles from different individuals, from the highly sophisticated administrator, if you like, the people that write the cybercrime code or look at an attack from start to finish, right through to the money mules, who are the people who actually are the cashiers out on the ground. And each of those lines in that business typically don't meet each other. They're all hidden through the dark web, typically. So I'd like to surmise that cyber criminals think just like businesses do. What is the benefit if I do something, and what is the cost, and what are the consequences should we do that and it shouldn't work? So according to Hackonomics, the cyber black market is actually more profitable than the drug trade. So if we think about that for a moment, how big is the illegal drugs trade? Well, in 2011, the UN number, and I know it's old data, but for the purposes of trying to explain it, it works quite well, estimated that the illicit drugs trade was worth $2.1 trillion. Now that's a huge amount of money, even to try and get my head around, 2.1 trillion. So if we break that down and have a look at just the cocaine market, which is a subset of the drugs trade, I think that's about 85 billion. Although that's still a huge number, it's a number that I can really work with, because if you compare that to Google's revenue, that's about the same amount of revenue. So 85 billion for the cocaine market against 90 billion for Google. So if the drugs trade is more profitable than, if cybercrime is more profitable than the drugs trade, how can we work that out from a business perspective? So Google has 57,000 full-time employees. So if we extrapolate that out further, we can see that the illicit drugs trade is worth 2.1 trillion. The cocaine market, which is a subset of that, is worth 85 billion. Google's revenue is around 90 billion. They have just over 57,000 employees, which works out as 1.5 million per employee. Now, if you extrapolate that out into the cyber world, if we're saying that the cybercrime world is more profitable than the drugs trade, and the drugs trade is worth 2.1 trillion, if we say 2.1 trillion and 1.5 million per person, if it's more profitable, that works out at 1.4 million people, at least, in the cybercrime market, each earning 1.5 million profit. Now, that's more than a business. That's huge. That's an entire economy. So these things have evolved over time. It's not that somebody in a bedroom somewhere has created a piece of code and then has tried to cash out. These things have evolved over time. So people have become more specialized in their areas. So does anyone know how the bad guys are filtrating their money through bank accounts in the UK with our strict kind of financial laws? No? So in a previous role, I used to look after financial crime and cybersecurity, and there's a big convergence in the market between the two of them. A lot of you, I'm sure, is familiar with the Bangladeshi bank heist, where it alleged that the Lazarus Group from North Korea siphoned 81 million out of the Bangladeshi bank with some SWIFT transactions, which went all over the world. Most notably, 10 million got siphoned through a casino in the Philippines, which has no money laundering rules, and hence it couldn't be traced, etc., etc. But the overall number of, or the value of that initial cyber attack was around $960 million. It was only because there was a spelling mistake in one of those transactions that it didn't take place. Now, it's widely regarded that the Lazarus Group from North Korea created that attack to circumvent the international trade sanctions against North Korea to help fund their military regime. Now, that's just speculation, because the similarities in the code that was found in the Bangladeshi bank were similar to the pieces of code that was found in the Sony attack that, again, was attributed to North Korea around the film for Kim Jong-un. But these types of attacks are not one person. There are a number of people, all with a role to play in creation of that code, to actually farming it out, to the infrastructure that's being used, to the people on the ground pushing that out or doing the attack themselves. And so you've got a number of people, like a business, running in these cyber attacks, which, as we've just seen, can be hugely profitable. Now, the problem that we've got is that the specialization in the cyber black market for particular pieces of malware is driving an explosion in the number of attacks. Now, we're seeing the number of attacks grow exponentially. Now, if we rewind the clock back to the early 2000s, about 97, 98% of malware could be stopped with signatures. That has decreased year on year to quite low levels, where, came the era of heuristics, then came the sandbox. Now we need more intelligent capabilities, like AI that we've just had a presentation from with the guy from Checkpoint. But we're seeing lots of AI engines, lots of machine learning engines, but the attacks still increase in both the number and also the severity. So if we look at this quote here, and actually it's the bottom bit I want to draw your attention to, which is developers don't necessarily need to work for a large software house to earn lots of money, to be able to get lots of money. If they're hugely talented and they can find exploits within software, then they could sell that on the dark web for different values. And depending on the level of expertise they have, they can sell it for quite some sizable sums. Now, the bottom line stipulates that the only difference between one of these guys that create this bad malware and a normal developer is that they just call them evil because they're creating that 0-day or that vulnerability that's undetectable. So, like in any market, current trends, they come and they go. So as we see new pieces of software being used, new exploits are coming out, new versions of software coming out, there are places in the world where there are literally hundreds of people trying to hack specific pieces of software to try and find a vulnerability that can be manipulated. So when they find those pieces of software, they don't send them out to everybody that they can find. They send them in 1 or 2 instances in very small quantities so that they can fly under radar. And that makes those 0 days incredibly valuable to them. So, again, the cost of actually launching an attack has decreased significantly over the years. I mean, if you look at, for instance, offshore private hosting, $6 a month. If you want to launch a DDoS botnet, you can hire a botnet, for $535 for 5 hours for 1 week. Now, if you imagine that you're a disgruntled employee or just a normal person wanting to attack somebody that you don't like or their business, it's possible quite cheaply. So if we look at one of those botnet rental sites, we start looking at it in a different light, in that it looks very much like how we work in business. I mean, if we start off looking at the product packaging, if the top one, for instance, there's $450 a month, but you get no free upgrades. That's it, you get the bare bones rental. But then you start going up to add-on features and tiering pricing. So you can have a gold and a silver and a gold package, for instance. Then you can have add-ons, just like we do on business, so that for a little bit more money, you can get extra features and benefits. So these guys are setting up their cyber criminal activities in the same way that we look at business. They also offer bulk discounting. Now, again, years ago, I did see a site back in around 2002, I think it was. There was like an eBay site for malware, and you could bid on some malware to get sole access, but if you paid a monthly subscription, you would get free updates when there were vendors out there that could detect that 0 day. And they also offered great customer service. And a lot of the cyber criminals were fighting between them around who could provide the better customer service. So what if instead of relying on punishing the cyber criminals, we changed the way that their economics worked? So here we have the traditional economics literature on crime suggested that increasing the punishment for crime or increasing the probabilities of arrest and conviction would reduce the frequency of crime. Now, history shows us that that doesn't work. So the more that you kind of go in with more stringent penalties, it doesn't stop the bad guys because the rewards are so great. So in 2007, there was an article which stipulated that the value of a credit card at the time was around $300 per pop. The amount of detection capability to spot fraud was very, very low. And if we compare that to 2015, that had dropped 98.3%. So that's a significant reduction in what that credit card value was. And we've all experienced why. We've all had the text message from the bank saying, this transaction does not look legitimate. Please text us back or call us to let us know it was legitimate, because otherwise we won't let this through and we'll block the account. I mean, there's a lot of analytics behind the scenes running in the fraud engines, which is all working on big data, all looking at fuzzy matching, if you like. What are the patterns of behaviors? What are the spending patterns of an individual? Where are the locations of those payments? What are the value of those payments? And then those are correlated together to try and look at what is normal behavior. In insurance fraud, they have something called social network analytics, which looks at mapping out any particular claim. For instance, with the rise of whiplash claims, the insurance companies are using software that tries to pull together registrations, individuals, addresses, garage used, to see if there are any patterns across those types of insurance claims. And lo and behold, they are catching quite a few gangs that make it their business. It seems that somebody that had an accident in Cardiff lives at the same address as somebody that had a similar accident up in Glasgow, that both got their car repaired at a garage in Birmingham that also has had 13 other whiplash injury claims fixed at the same garage. And that's how they can find out and root out the kind of the bad guy behavior or the organized crime in the insurance industry. So surely, if we start looking at that from a cyber perspective, you can use similar tactics around it. So years ago, the fraud detectors at the banks would look once a day at 5 streams of data to give a human view on whether they thought that something was fraudulent or not. Nowadays, that's dropped considerably. It's real time. There's a new European legislation called the PSD2 legislation, the Payment Service Directive, which is allowing banks to share data with third parties, and that's why we're seeing an explosion in Apple Pay and Amazon Pay. So the number of transactions that are actually taking place are growing exponentially. So the processing required to give a yes/no on whether that's fraudulent or not needs to be in the very low milliseconds on a huge amount of data, not just locally to the individual, but to a place where they're buying it from. You know, I started a job a few years ago. I had a company credit card. I got into a taxi to go to my first customer meeting. The taxi driver gave me the POS system. I typed in my number. I kept my card at all times, and I passed it back to him. Then I had a text when I got out of the cab into the customer meeting saying £750 had been taken off my card to the East African Dining Society. So how did that transaction take place? Because my card wasn't swiped. Actually, there have been stories, which I'm sure some of you are aware, of the POS systems coming out of China that already have malware on it. So looking at that, compared to years ago, where you had somebody looking at a report once a day to look whether something was actually fraudulent or not, just didn't work. As I say, we've seen that with cybersecurity and certainly with endpoint security. So the old system was, we had signatures, checking possibly updates once a week, once they've been tested on all the systems, etc. But the new system needs to be immediate. Because as I'm sure everybody's aware, with WannaCry and NotPetya, that's an instant cybercrime, an instant action. You can't then have a reactive reaction to try and save something like that happening. So traditional endpoint security has those signatures. The new next generation endpoint security has predictive type analytics in the background. It can make decisions in a split second. It follows on from what we've learned in the fraud world and in the finance world to get better at what we see in cybersecurity. And that means huge data lakes, not locally, but in the cloud. So you can use the analysis not only on your local data, but on other companies' data as well, which is all segregated. But when you look at patterns and behavior over time, it highlights things that actually you wouldn't be able to see with an instant kind of decision-making tool. So that provides better protection with data analytics in huge data lakes, but also simplified operations, because it enables you to focus on the things that will enable you to move your business forward rather than worry about a lot of your other attacks that are going on in your environment. Now, the Carbon Black Predictive Security Cloud gives a single agent through a single console with a single data set, and that's true unfiltered data. It's also market proven. We've had very, very good results in the tests that we've performed. And to give you some idea, I mean, a long time ago, traditional endpoint solutions could slow machines down. I mean, I've been working in organizations where every Friday morning they did a full system scan and you had to wait for 2 hours for it to finish before you could start doing stuff. So Carbon Black actually takes less than 1% processing power and less than 1% memory on the machine. So it's very, very lightweight and almost invisible to an end user unless, of course, they brought up their process tree. We're currently scanning more than 14 million endpoints. We have close to 4,000 customers, 13,000 practitioners, and 31 of the Fortune 100. Thank you. Does anybody have any questions? No? Well, thank you very much, and good day.